President Joe Biden expressed optimism about the direction of the U.S. economy, saying America will be able to rein in historically high inflation and that he's hoping the Federal Reserve will achieve a soft landing by slowing economic growth without going into recession. "I'm telling the American people that we're going to get control of inflation," Biden said in an interview with CBS's 60 Minutes, that aired recently. U.S. inflation this year has soared to the highest levels seen since the early 1980s as a confluence of factors, including the pandemic, supply chain snags, and Russia's war in Ukraine, have upended the global economy. The latest reading of the government's widely followed inflation report, the Consumer Price Index, showed that the annual pace of inflation has started to tick down in recent months, measuring 8.3% for the year ending in August, the second month of declines. In June, the CPI reached 9.1% year-over-year, the highest inflation rate in more than 4 decades. However, August's CPI report also showed a higher-than-expected month-on-month gain of 0.1%, when economists were anticipating a fall. That sent stock prices hurtling downward, with all 3 major U.S. indexes logging their worst day in more than 2 years. Biden attempted to temper those concerns and expressed optimism that the worst may be over. "Let's put this in perspective. Inflation rate month-to-month was just an inch, hardly at all," he said in the interview. He touted his administration's gains in the labor market, with 10 million new jobs added since he took office, and its investments in the semiconductor industry. "In the meantime, we created all these jobs and prices have gone up, but they've come down for energy," he said. While declining energy prices have helped to lower the overall inflation rate, price increases for food and shelter remain stubbornly high. While the central bank's efforts to cinch up monetary policy can dampen demand, Fed officials are not able to tackle conditions on the supply side that may keep upward pressure on inflation. In that inflation fight, however, there is also concern that the Fed's barrage of consecutive, massive rate hikes could send the U.S. economy into a recession. But Biden, in the 60 Minutes interview, said he doesn't believe the economy will get worse before it gets better. Meanwhile, the recession is getting worse and major retail chains and stores are closing its doors. This week, Bed Bath & Beyond announced it's stripping down its big blue signs, clearing out aisles of linens and closing hundreds of stores. The company filed for bankruptcy Sunday and said it will begin closing its remaining 360 Bed Bath & Beyond stores and 120 buybuy BABY locations. Bed Bath & Beyond already has closed 400 stores over the past year. There's been little new retail development since the 2008 financial crisis and the rise of online shopping, and vacancy rates are at historic lows. Whole Foods is another affected by the recession. Crime is out of control at its San Francisco location. Whole Foods closes San Francisco flagship store after 1 year, citing worker safety. Whole Foods in downtown San Francisco that opened just last year is temporarily closing. The company said concerns about worker safety forced it to shut down. Incidents of theft in San Francisco have gained national attention, with rampant theft and safety concerns. Property crimes in San Francisco have garnered national attention because of several attention-grabbing videos of thieves in action. Though still well below 2017 levels, the city saw a 23% increase in property crimes between 2020 and 2022, with spikes in burglary and theft headlining the surge, according to San Francisco Police Department data. With the recession worsening, things seem certain. It may get worse before it gets better.